Hello, this is Solomon Davis, Right Side Trader. Today is November 13th, 2023, and this is something on trader's mindset. This is all for educational purposes only, no trade recommendation here. As we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. Let me just jump right over here to the chart. What I want to talk about today is the fear of missing out. That's what it's all really about. It's the fear of missing out. It's also about the hoping, the wishing, when all you really need to do is just pay attention to what's happening right in front of you. And all I'm gonna stick on this one time frame. I'm on a monthly time frame. The stochastic really doesn't really matter that much here because this is also about IPO stocks too. IPO stocks was one of the first things that I actually traded when it was the first thing that I actually traded. I was invested in other stocks and all for long-term type stuff, but when I can start trading on my own, the first thing that I jumped to was an IPO stock because it's no longer listed. I don't believe. Let me take a quick look before I jump back to this one. That's the symbol, but that's not it at all. It was called, I don't know. It was related to Oracle software, and the guy that's over Oracle at the time, NetSuite. It was NetSuite, and all. And I was into software. I was into database type stuff. I was into application development type stuff at the time. So I knew a lot. I had followed this. I knew about this. It is still called. They still do call it NetSuite. But as you can see, it's listed under something else right now, and I don't know what's going on with it. And all is the prices right? I don't even know what these prices are. This was back. Yeah, this probably back in 2007, 2008. Yep, this is it. I traded it. This one day, it doubled, as you can see. It went from $25 to almost $50 and all. And I was trying to get out of it in that. This is a monthly chart, but it happened within a few days. That's the whole thing. That's what I'm getting at. When I was trading this thing, I doubled my money like right away on this thing. And I was I always, since I've been trading, I've been the in and out type. I haven't been, when I'm trading, it's just in and out. I don't plan on holding things too long. I do have some long-term investments and stuff, but if I'm trading it, I'm in and out because based on what I see in the market. All right, it was this NetSuite thing right here and all. And I forgot about it, really, to tell you the truth. I didn't even know if it's still listed out here, but it's listed out here kind of funny. As you can see, it hasn't traded since 2017, and that's another reason with these whole IPO things. They're not something to buy. They're not for long. In my opinion, they're probably not for long-term investments. And some will, like you said, there's 7,000 companies at one time. They were IPOs, and they are still out there. So the thing is, you just have to get where you pay attention to what's going on with those companies and what's going on with that business in order to make sure you protect your money. Bottom line on that. Well, let's get back over to this one right here. And what I really want to talk about is when it comes to IPOs is that this is a common pattern that they make right here. There's a lot of excitement the first few months and all, and or maybe just the first month, as you saw back then in 2007. On that particular one, it was just the first couple of months. It was up and down, and it was done. There are rules where the people that are invested in them and all, they cannot jump out of them right away and all that kind of stuff. You have to look into all that kind of stuff. You make sure that you understand those rules and everything, and when can they do stuff, because they probably, as soon as they can get their money out, they will be getting their money out. And that's probably what you see, at these different drop points and stuff. I don't know. I'm just looking at the charts. And all I'm going to do is look at the charts here. But what I really want to get at is if you do get into some of these things and all, when is the point to get out? If you're a technical trader, it's very easy to see, when things are topping on a big frame, on the big time frame. You can see if you got into this thing at, say you got in there somewhere around $80 and all a share. It went to almost a double. That's one of my triggers. Double my money. I don't want to give any money back after that. and all. So again, I might give 5% back, 10% back, and be done, and all. And as you can see, this thing was topping, and it made some topping patterns, and it rolled over. So again, that was your first point if you had got into here to get out of this stock, at that time. Okay, so you didn't find out about it. You saw it was, and the thing is, try to learn to use what you see in front of you. It's not just candles, not just candle patterns, but what you see in front of you on the larger time frame. If you're going to be holding these things for months, years, like that, use that time frame. That's why I'm only looking at this one time frame here, because this is for you longer term type traders and all. You guys who like buying stuff and holding stuff, think you're going to give it over to your kids, and you're going to end up giving your kids a little bit of nothing based on where this is at right now, as you can see. And you don't want that to happen. So again, you got to pay attention to that money. And this thing here doesn't even pay any dividends. So again, it's nothing that you're going to be turning over if you don't pay attention to what's happening, in front of you while you're holding the thing. So again, this thing got up here at top, it came back down, and let's just say it came back. It didn't quite. It almost came down below your $80 again. It got back in there, and it's back down to the price where I got it at before. So you're back in at $80 again. You're right. It's heading up. Start making higher highs, higher lows, and all. It tops out at 210, comes back down, and all. You've doubled your money again. You're done. Based on my rules, I'm done again. Okay, I look to take 5%, 10% loss on it, and I'm done of it. If it can't do any better than that, that's a good rule for me. If I double my money in a position, it pulls back more than I can give it 5%, then I have to put a hard stop at 10% if I don't get out at the 5% based on what I'm seeing on the chart. I'm done with it. So now, this thing drops again. So again, that's a good rule to have. Give me some rules, some of my rules, Now you see a bearish looking pattern at the top on a monthly, on a high time frame. This is the bearish engulfing. This candle is just barely, and I look at bodies. I don't take the wicks, because the wicks can be some crazy print that happened way up there. It can be some crazy print that happened down here, and it shows up as a wick. I look at the open and close of the bodies. We know there's some trading action going on in there, and plus, especially if we have wicks outside of that. So now I got a confirmation on the downside. I need to be out of this. So 80, I got out at 80 at the end of the month. I see I'm at 104, because it closes down here. I need to be out. Don't start hoping and wishing and praying or whatever else you may do in order to think this thing is going to come back. It's done. And then you can see, based on that, at least you wait to a better time to get into the thing, and you can kind of just keep it on your watch list and all. So again, the money was here. The money could have been made, as long as you don't get into this whole mindset of hoping, wishing, and not having a set of rules to keep your money in your account, and let this market take your money away from you. So now, after the first two pops, usually on IPOs and all, if you get this type of pattern on them and all, it drops again. Now it drops back down to your 80, but you have to. This is like the first time. Like anybody who knows me and trades with me know me. I always say the first time is the best time when it comes back to that price point. The second time when it comes back to this price point, you have to wait for confirmation. I talk about that all the time if you trade with me. Okay, again. So you're waiting to the end of the month. That's something we do at Right Side Trading all the time. We wait until we see something on the chart to tell us to get into that trade. So you wait till the end of the month, then next month, nothing and all. Nothing to come back up here. Because again, you want to get in at $80 and all, but you wanted to wait and see you had confirmation to get back in. Nothing gave you confirmation to get back in. It continued to the downside. And then from there on out, you ended up getting some dojis. No confirmation on your doji. You got here, you got a candle pattern, you got something trying to go back up, but no confirmation to the upside. Again, next month, it went down lower. Next month, it went lower. You got something that's looking like it wanted to go back up to the upside, no confirmation. So you're still not in. Again, it goes down lower. This next month, you get a little green little looking pattern, no confirmation, or no, not even nothing to show you a pattern that this thing maybe wanted to turn around. Then so on and so on and so on. Not until here on this particular earnings thing, you did get a green that month. You did get a candle pattern that month. You did almost get confirmation. You could have jumped into this thing right here, but now if you jumped in it and all, this would have been your confirmation candle, but your confirmation candle is a doji and all. If you jumped in, you need to stop out at the low of that month. If you jumped in at the end of this month, your out is at the low of this month. So you would have been out right away the next month. And then this thing drop the next couple of months. And now we're here at present day. You're getting, another doji and all. So you're looking for the same type thing that what I just went through is looking for that, okay, we're ready to go up candle, then confirmation. And it's all based on your plan, your strategy. Do you wait on that confirmation candle and get in, or do you get in on that candle that seems like, okay, I'm ready to go up? Because you could have got in on this candle, okay, look like I'm ready to go up. The next month you got in, but now your stop has to be that previous month low, because if it's not making higher lows and higher highs, it's doing this. And that's all I really want to share at this time. This is one of these stocks that the last couple of years you should have been using your money, whatever money you had, tied up into this thing and making money in the market on something else. Do not get married to stocks. Get disciplined about how you do. Don't be so concerned about missing out, because you will see it happening on the chart in front of you. And just don't be afraid of jumping in based on what you see on the chart and this thing is ready to go. The whole while this is the closest time that this thing ever got close to maybe where it was ready to go, but you would have been out the next month based on if you had any solid rules and solid plans on actually trading. And if you don't have solid rules and solid plans on trading, please contact us here at Right Side Trading or contact me directly, and it's something that we can help you guys with. This is Solomon, Right Side Trader. I hope you guys have a great week. Hope you guys had a great weekend, and let's make some money this week. Talk to you later. Bye.